Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm going solo to talk about the hottest topic out there. No, it's not AI. It's the small cap stocks. What is going on out there? Suddenly, the small caps have surged into favor. They have been rallying here in mid-July 2024, and now suddenly everybody wants to own them. So I'm getting these questions on my X/Twitter about the small caps. Which ones should you buy? Should I just buy the index? And my advice is, yes, you should just buy the index. But I know for many of you, that's not as fun, right? Because we do like to own the individual stocks. But with the small caps, it's a little more difficult than the large or even the mids because there's just fewer analysts watching these companies and there's just less information out there. So fewer analysts means fewer notes, fewer discussion on, television shows. Most likely, Jim Cramer is probably not covering most of these stocks on Mad Money. That's just not what he's going to do. So you have to dig deep. You have to really look around. You have to listen in on these conference calls when they have them. You have to find any kind of information on these companies. And also sometimes with small caps, it's kind of what you know. You might already be familiar with a small cap company or maybe even work at one. So you kind of have some localized knowledge that maybe other people don't have. Now, there's various ways you can buy on the indexes. You can buy just the basic Russell 2000, which you can buy just in the ETF, which is the IWM. Or you can buy the S&P 600, which some people think is of a little bit better representation of the more higher quality companies that may have more than one analyst watching some of them. So that's an option as well on the S&P 600. But most people, when they talk about the small caps, are talking about the Russell 2000. And there's a lot of ETFs you can buy that parse that up even into smaller groupings. So you can buy Russell 2000 value, you can buy Russell 2000 growth, you can buy both of them and cover the whole gamut. But I do caution if you're going to buy the value one and the growth one that they do overlap quite a bit because there's only so many value small cap stocks. So in order to fill up the portfolio, they do stick in some growth names there and vice versa. So you're going to have a lot of, like I said, overlap on those two type of investing strategies. But if you really want those individual names, then, Zacks is the place to try to find them because we can deploy the Zacks Rank, which is our short-term recommendation system to try to find the best quality small caps. So what would I use with that? I would look for the Zacks #1 strong buys, because those are our top quality stocks in general, no matter what type of market cap. But certainly in the small caps, I want to get the #1s because I want those earnings estimates to be rising. I want something good to be going on there with my small cap company because that's a good place to start, right? So why not start that way? Now, we have a couple of very good small cap screening tools on Zacks.com. You do have to be a preferred member to get some of those. But for this podcast, and if you're watching on the video podcast, I'm going to run it just for you and I, and we'll see what's going to be in this screen. So I'm going to take you through it because I get asked a lot, like, how do I screen for these small caps? And you might as well use a predefined screen because it's going to give you the power of the Zacks Rank, as I said, plus a whole bunch of other little features in there that you might not be thinking about that you still may want when you're looking for those small cap stocks and to find the best quality of the small cap stocks. So let's dive right in. I'm going to share my screen. And I'm going to take us over to Zacks.com. So remember, it's just ZACKS.com. This is our site. And up at the top, you see all these green buttons with, various different areas you can be looking at. And obviously there's one there that just says screening. That's what we want. And if you click on that, you can see it scrolls down. You have screening, stock screener, mutual fund screener, ETF screener, premium screens, basic screens, thematic screens, and then our more advanced product research wizard. For our purposes, I always go just directly to the stock screener tool. So I'm going to click on that. Now, I am a premium subscriber, so I already have access to the basic screens, which anyone can access, but also the more premium predefined screens. So if you click on just the stock screener tool, you'll come to this page, which is the stock screener. But up at the top, you see a bunch of buttons at the top of the screener. And in green, you see my screen, predefined, and then help. So the predefined is what I like to use. These are the more advanced predefined screens that you can get as a premium investor. Because if you look underneath here, you'll see all the other things you can do if you want to just build your own. But we're too lazy, so we're going to go with the predefined. So if I click on that, it gives me the two that I was just mentioning, the basic, which anyone can click on, and you get all the basic screens, which are actually pretty good too, but they're unlikely to include the Zacks Rank. And for this screen, looking for these small caps, I really want the Zacks Rank. So on the right, it says premium. It's got our little logo there, and that means you do have to be a premium member to get in there. But like I said, I am one. So I'm going to click on it. And now we're into the premium screens. And if you scroll down a bit, they are grouped by stock investing strategies and then things like market cap, which is what we want. But I encourage you not to overlook the different strategies, value, growth, dividend, momentum are all on here, because stuck in there are sometimes market cap type screens and other things of interest. So you may say, I'm not a value investor, but you still may want to run one of those screens, even if you're not a value investor. So I'm going to scroll down. Value is the one that leads off on this list as we're scrolling. Then we get growth. So there's some interesting ones there. This one, I'm pausing here, that's titled Growth, Dividends, and the Zacks Rank is one of my favorites on the growthy side because I do like the dividends, and we got the Zacks Rank. But continuing to scroll down, we get momentum. So these are the big investing strategies: value, growth, momentum, which are also reflected in the style scores on Zacks.com. And then you do get the style scores, the VGM here. So if I want to just I can run the screen, which I actually think I haven't done for a podcast. The best of the best screen leads this one off, and it's VGMs, which are A's. That's the top, with the Zacks #1 rank. So that's the top of everything, basically, in that screen, which is why it's called the best of the best. I'm kind of curious how many might be in that one, but we'll save that one for another day. Then we have the income. If you just want the dividends, I like those. And then finally, we get market cap. Now you're going to get, you can see there's a large cap, we have a mid-sized cap, and then finally we get small caps. Now just looking right here, we have small cap #1s. That's all that one is. Then we get small caps with big growth right underneath it. Are there any others? Let's scroll down. We get another large cap and mid cap. So no, that's it. We, at least within the caps here. But like I said, sometimes it is stuck into the other strategies as well. There may be other small caps, but I'm just going to stick with these because I just want small caps with the high Zacks rank. And there is one, small cap number ones. That is the highest Zacks rank. That is the strong buys. And then it says market beating growth rates. If you click on the load screen, it will actually take you to how it loads. So let's do that. I loaded the screen and it's giving me right away. You can see here, it's giving me 8 matches. So what's in the screen? It's giving me this year's estimated growth of 10% or more, average volume over 100,000. So it doesn't want a stock that's only trading with like 5,000 shares a day. That's smart. It gives a last close over $1. So we're not looking for penny stocks here, which is important with small caps because you do tend to get a lot of these like $5 stocks and whatnot with the smaller cap stocks. Then we have percent change over the 4 weeks. We have last EPS surprise percentage. I guess it's looking like, because it says greater than 0, that it just really wants there to have been a surprise, not a miss, but a beat or a meet there. And then market cap is 1,000 here, less than 1,000, which is in the millions. So that is 1 billion or less. And then the Zacks rank of number 1. And then this year's estimated growth of less than or equal to 50%. So I'm kind of thinking that this market cap, because we're only getting 8 matches at a billion or less, is too small. So I'm going to change it to 2 because many people consider the small caps to be 2 billion now and less. And it did give me 4 more matches. So there's 12 stocks in this screen now. So I'm going to run it. And here are the 12 names. Now, just kind of looking at them, other than Lending Tree, ticker TREE, I don't recognize any of these companies. Maybe some of you do. And they range in market cap here. The smallest is 141 million. So I would consider that to be almost basically a micro cap. But it does have an analyst, at least one, covering it. And so it made the list. The biggest is 1.8 billion. So that's nearer our 2 billion level. That's our cutoff. So I'm glad for that because I do still consider those small caps. And that gives me a little more confidence in it because it's real hard buying a company that's only a market cap of 141 million. I would prefer something a little bit larger, but I picked out 5 random names out of this list to take a closer look at because, I was just curious what some of these were, and there is no rhyme or reason to which names I picked out. So we're going to take a look at what is happening with them. Now, I did already look up these 5 names to see what is going on with them. What do they do, basically? Because I didn't want that to hold us back from actually looking at the charts and the data that we have on Zacks.com for these stocks. So I just picked 5 randomly, but I will say I started with SoundHound AI, you can see, which is down here, kind of in the middle of the pack, ticker SOUN, because it has AI in it. So I had to pick that one. Yes, I'm a sucker for the AI in the name. And this one actually does do AI though. So it's a voice AI and speech recognition company founded in 2005. And their tag is technology for a voice enabled world. So I kind of like that. And I like it that they've been around a while. We can see here that is the one that's the market cap of 1.8 billion. Last earnings surprise was 22%, so they did beat there. But let's put it in now and leave this screen, and I'm going to put it in the quote bar there for this to search for it. And you can see we get the Zacks number 1 rank right there. It actually does have an F for the VGM score. So this would not have made the best of the best list, just FYI. And it's in the industry's computers IT services. Now it's only trading at $5.53 right now. So this is a stock under $10. And I'm scrolling down a bit now to see just the quote overview. And I see they have no PE. I'm going to click on the detailed earnings estimates on the left-hand side because that's my go-to whenever I look up a company for the first time. And I like to scroll down and see what the sales estimates and the earnings estimates are looking like. Okay, so sales estimates for 2024 expected to be up 54%. Wow, to 71 million from 45 million last year. And then look at next year up to 103 million. Also, that's more than doubled what happened last year. That's another gain of 46%. So those are some pretty stellar numbers, but they're still not making any money on the earnings side. It's still expected to be negative, even though it's having earnings growth of 13% for this year, 33% for next year, but a loss of 33 cents this year and a loss of 22 cents next year. We do have one analyst raising for next year. And we have two estimates on the company on the earnings for this year and next year, but we don't know if that's just one analyst making a few different estimate changes or if it's actually two analysts. But this is common to have one or two analysts on these companies. Now, the earnings surprises down here, you can see that there are some in the last 4 quarters and including the one from last quarter, which was 22%. So I would, if I'm just looking at this, which we are, I would like to dive in further about where is this incredible sales growth coming from? And is it sustainable? And can they get their earnings into the positive here with that kind of sales growth? And if not, why not? So those are my questions on SoundHound. But again, this is why investing in the small caps is very difficult because there is a lot lesser information out there about what is going on with the company. But you would have to do a deep dive, go to their website, listen in on the conference calls, see if there's any analyst notes on SoundHound, and then make some decisions. So that's SoundHound AI, ticker SOUN. And then I picked one of the top stocks on that screen, which was Afya. AFYA is the ticker. And so I went in and looked to see what this one does. I'm putting it in the quote bar now, and it's the largest hub of education and solutions for medical practice in Brazil. That's what it said. They have 334,000 physicians and medical students in their ecosystem. So I'm not totally sure exactly what that means, but they're in schools. That's their industry. So that does give us a little more idea. It does say hub of education and solutions. They have an AVGM here. So that's a lot better than the one we just saw for SoundHound. Obviously, the Zacks #1 rank. They're trading at $18.82. But so that's above the $10 mark. So just scrolling down a bit on the quote page, forward PE is 10.9 and they have a PEG ratio of 0.46. So we have some positive earnings here for this company. Market cap of this one is 1.6 billion. So it is on the higher side, but I'm going to click on the detailed estimates now because that's the area I always love to go to, and scrolling down. So this year, estimated sales up 6.8% to 615 million, and then up another 13% to 696 million expected for next year. Earnings estimates, you can see why maybe we got the Zacks #1 rank. 3 are higher in the last 60 days, 1 in the last 30 days for 2024, 2 in the last 60 days, and 1 in the last 30 days for 2025. And some nice earnings growth expected on this one too, 27% for 2024, 21% for 2025. And so I like to see all of this. But again, a Brazilian company, I would have to dive in. I would have to see, what's their competition? What is the rest of the growth looking like? I'm going to click on the price to consensus chart real quick here, even though we haven't been looking. Okay, so this is pretty interesting. The shares are not near their highs, which were back pre-pandemic, even in 2019 there and pretty high in 2020, but steadily fell into 2022, trying to recover a bit, but a little bit weaker here in 2024. But look at these earnings. That's where we're starting to see bang, 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 higher, higher, higher. But can the stock respond here? Maybe another earnings result will do it for Afya. But this is an intriguing play with the 1.6 billion market cap. So the ticker is the same as the name, AFYA. Then I went for one of the Biosciences, even though I was a little dubious. I'm always a little scared for some of these small cap, anything with the bio in there, because there's a lot of drug companies that are in the small cap category. You really have to know your stuff and, you really have to be an analyst to know what's going on with some of these small caps. So the one I picked was Castle Biosciences, ticker C as in cat, S as in Sam, T as in Tom, L as in Larry. This has a D for the VGM score, but it's got the Zacks #1 rank, so something must be good going on with it. Let's do the quote overview first on this one. They are in the biomedical and genetics side of the medical industry. And so this one said they're a leading molecular diagnostics company. Disease management is their side. So specifically for dermatologic cancers, uveal melanoma, Barrett's esophagus. So those are the diagnostic end of things. They have a $520 million market cap, but no PE or PEG ratio. So that means negative earnings. This is what you would kind of expect from these biosciences or any kind of biotech. So I'm clicking on the detailed earnings and we're just going to take a look. So 2024 sales expected to grow 18.7% and then another 4.2% for next year. So we're looking at 260 million up from 219 million this year. And then 2025, 271 million. We only have one estimate on the sales. We do have two estimates on the earnings, but negative, as I already said, but growth of 20.5% this year. They lost 214 last year, expected to lose 170, but then a little bit of a retreat next year, a loss of another 10% down to 188, a loss of 188. We have one estimate is up in the last 60 days for both this year and last year. I would assume that's why it's getting that Zacks #1 rank. This would have to really be investigated. Why are they not making any money? Do they have a plan to turn that around? Because I do like to buy companies that are profitable, even in the small cap category. But again, a lot of extra research has to be done on Castle Biosciences, ticker CSTL. Okay, number 4 stock was TriMas Corp, ticker T as in Tom, R as in Robert, S as in Sam. And this one is a manufacturer of a diverse set of products, primarily consumer products and aerospace and defense and industrial end markets. So their categories are packaging, life sciences, and aerospace. They have 3,400 employees in 13 countries. They are headquartered in Michigan. So that ticker was TRS. So I'm putting that into the quote bar up at the top. And this one is obviously the Zacks #1 rank. It has a B VGM score. It's trading at 2689 right now, and it's in the metal products procurement and fabrication industry. Well, I wasn't expecting that. I don't know what industry I thought it would be in, but I didn't think metal products for some reason. But they do manufacture products for all those industries. So I guess this does make some sense. They have a $1.05 billion market cap, and they actually pay a dividend, yielding 0.6% or 16 cents a share. So dividends are a little bit unusual for small cap companies. You usually are in some kind of old economy type of industry when you're paying that dividend. But it says a good thing about a company that they have the cash flow to pay that dividend. They do have a forward P of 12.8. So that's cheap. And obviously they are with positive earnings. So what do those earnings look like for TriMas? I'm going to scroll down. So sales estimates expected to be up 7.4% this year to 959 million, up from 893 million. And then next year up another 23.8% to 1.2 billion. So I'm not sure if this is the first time this company's ever hit the $1 billion level on sales. But it's a big milestone for most companies to hit that $1 billion level. So that could be a big deal for TriMas. And I like companies kind of going for these goals, especially on the small caps. So scrolling down to earnings, expected to be up 16.7% this year to 203 from $1.74. And then another 7.9% to 219 next year. So this is all looking pretty good. We only have one change in the analyst estimates, and it's for 2024 for this year. In the last 60 days, it is higher. And so we got a little bit of increase and momentum upward on the consensus estimate, and it is trending higher. That's why we got the Zacks number one rank. And I'll just take a look at the surprise. It's beat 2 out of the last 4 quarters with one other meet in there. So I'm liking that, and it has a big beat last quarter of 32%. So something pretty good is going on here. This is kind of a solid standard small cap type stock. But let's take a look at the price of consensus just because that will go back a couple of years. Okay, so you can see 2022, the price of consensus on the earnings did come down from its original highs, and then certainly for 2023. Now, the analysts started off kind of bullish for 2024, 2025, had a cut, and it came down, but now it's basically stabilized a bit. But the shares haven't really gone anywhere here, kind of a narrow trading range for most of 2023 into 2024. But the small caps have lagged, and a stock like this, one of these small caps types, will need a momentum in the underlying small caps for momentum to catch on, right? So we need those small caps to break out to another new high to get these stocks moving. So that's TriMas Corp, ticker TRS. And then I went with, for the final stock, a company just called Immersion, because that sounded intriguing to me. What does that mean? That's a cool word, immersion. Be kind of fun. Like, I work at Immersion. I love it. Ticker I as in I, M as in Mary, M as in Mary, R as in Robert. 4 letters. IMMR. It's got the number one rank, of course, but it's got a B for the VGM score. And its industry is computer peripheral equipment. That sounds pretty specific. I wasn't sure what I was getting into with this one, but on their website, they said they do touch feedback technology. And it's called haptic feedback, and it's in the digital space. They've been in business since 1993, since computers and your desktop first started taking off, because it's the power of touch, which it says on its website. And so it's used their type of technology in over 3 billion devices worldwide. So think about when you touch your iPhone and how it feels, where the buttons are, how it vibrates, all of these things, or on your computer, how the mouse works when you touch it. That is what they do. So I found that to be very interesting. We found a tech stock amongst these names, including SoundHound, but now Immersion as well. It only has a market cap of 367 million, even though it's been around since 1993. So this is a true small cap company that most of us have never heard of. It does have a forward PE of 7.5, so that's dirt cheap. And I'm liking that it does have the forward PE because that means it does have some positive earnings. So let's look at those detailed earnings because that's what we like to do, of course, and dig down a little bit deeper. How does it get the Zacks number one rank? So I'm scrolling down. We only have one analyst here for 2024 because there's just one estimate and there's none for next year. So somehow we're missing the data. I might have to check on that. Either the analyst hasn't provided any for next year, they haven't guessed yet, or did their modeling and figure that out, or maybe we have a little snafu there. But for this year, huge sales growth of 112%. So they made 33.9 million in sales last year, expected to make 71 million this year. And looking at that earnings, up 48%. They made 104 last year, expect to make $1.54. That's pretty impressive. We do have one analyst on it who is revised higher in the last 30 days. So that's where you get that Zacks number one rank. And they revised higher by a lot. $1.54 versus $1.17 just 30 days ago makes me wonder whether or not the company hasn't come out and given some kind of guidance there to, really go for it. And really raise that full year guidance or that estimate there. But we'd have to dive in to see. And let's take a look at the price of consensus on this one. It is a lot smaller than some of the others we've been looking at. Is it volatile? Yes, it is. So the peak of the last 5 years was in 2021. And it got up to almost $15 a share. It's currently at $12.16. So you can see it's caught a bid here again in 2024, and it's moving higher. So I do like to see that, but it was kind of in the wilderness there for 2022, 2023, just kind of waiting for a catalyst. But maybe this is it now with those earnings estimates on the rise. But again, we really do need the small caps overall to start rallying to get these underlying stocks to also find buyers. Because let's be honest, our focus for the last year has been on the large cap stocks, specifically AI. And why wouldn't it be? We've seen huge gains in those. They were almost kind of like sure things. And that's been a huge party. I wouldn't have to worry about small caps or even think about them. And I know many of you might not own any of them, even in the indexes. But when the money rotates back in, that can create powerful rallies in the small caps. We've seen it over many years. And small cap value actually is the best performing of the asset classes in stocks over the longer period of, say, the last 100 years. But it's been a long while since small cap value has done its thing. A lot of us on the small cap side have had to be patient over mainly even the last decade as those large caps have taken over the market. But will this be a change? It's unclear. It's too early to know. But if you like the idea of owning some of the small caps, you really have to be the kind of investor who likes being a detective. Otherwise, just own the indexes, which I mentioned earlier. Just own the IWM, for instance, because that gives you the complete basket. And when the small caps rally, you'll own all of them and you'll, hopefully it rallies along with everything else. And that's the point. But for those of you kind of digging around, looking for those opportunities, those hidden gems, some of these may be interesting enough to put on your short list. But the Zacks rank is able to at least get us some stocks with rising earnings estimates, not necessarily positive earnings as we've seen, but still something good is going on there for that analyst to be raising those earnings estimates. So use your Zacks rank, especially if you're a premium subscriber and you have access to all these premium screens, because the Zacks rank can really narrow it down to give us something good going on in the story with these small cap stocks. Okay, let me recap the tickers again for those of you who might want to take a closer look at some of these and kind of see what's going on. So first, we talked about SoundHound AI. That's the speech and voice recognition company, ticker S as in Sam, OUN as in Nancy. SOUN. Then we had the education solutions in Brazil for those in medicine. Afya, I'm sure I'm saying that wrong, AFYA. That's all you need to be concerned about is the ticker AFYA. Then we had Castle Biosciences, ticker C as in cat, S as in Sam, T as in Tom, L as in Larry, CSTL. Then we had TriMas. That's on the metals manufacturing, T as in Tom, R as in Robert, S as in Sam, TRS. And then we finished up with Immersion, which is the touch technology, ticker IMMR. I as in I, M as in Mary, M as in Mary, R as in Robert. And as always, be sure to follow us here on the Zacks Market Edge podcast because I'm bringing you stocks or ETFs every week. So you want to subscribe to get all of our videos, get them at zacks.com/YouTube on our YouTube page. And you can get the just audio podcasts on Apple. We're on Spotify. We're on anywhere you can get the podcasts. But be sure to subscribe somewhere because I'm sure if this rally continues in small caps, I'll be talking further about a lot of these small cap companies, and you don't want to miss those for sure. So be sure to get us somewhere, and I'll see you again next week with some more stocks.